this year has been beyond good for oil and oil stocks as well. As you noted, oil has surging. By the way, if you're not counting at home, crude oil is up 50% in just 6 months. Okay, so you asked, why is oil going up even as supply goes up? Because demand is growing faster than supply. Amazing how that works in commodity markets. The demand in the United States, Kelly, is on the rise because you got more people driving. Everybody bought cars during the pandemic. We're seeing mass transit down. 2 million people getting on a plane. So in some cities, traffic is now above where it was pre-pandemic because nobody's riding the subway or a bus. They're driving that, 1998 Honda Accord they bought, so they could be alone. Anyway, supply growth here in the U.S. and OPEC is still fairly muted, even in the face of increasing demand. For example, U.S. producers not increasing their capital spending. Instead of drilling new wells, Kelly, they're giving money back to shareholders, and that has certainly helped the supply growth slow down. And OPEC has done something amazing. They've actually stuck together under the leadership of His Highness Abdulaziz bin Salman. Speaking of OPEC, meeting earlier today, virtually of course, OPEC does plan to gently, slowly put the 2 million barrels a day that they took offline as COVID hit back on the market, couple 100,000 barrels a day in increments. Now, the Saudi energy minister, Abdulaziz bin Salman, would not give in to numerous questions about whether they would do more, but I did have a chance to ask him whether or not about the relationship with the U.S., Kelly, and whether or not he has or plans to speak with U.S. Department of Energy Secretary Jennifer Granholm.
Yesterday, we saw each other in another setting, which has to do with mission innovation. She was participating and I was participating. And there is nothing that would not prevent us from reaching out to each other whenever there is a need for us to reach out to each other.
Yeah, and you can see the virtual meeting and our friend Halima Croft there on the middle right. It's like a giant Hollywood squares, OPEC style, Kelly. We tried to press him on supply. He wouldn't go there. By the way, with oil's rise, the stocks have done well, but maybe not as well as you might expect. Listen to this. The XLE ETF is up 8 months in a row. By the way, longest streak in more than a decade. But Tom Lee and others have pointed out that the gap between oil and where the stocks are is still wide. Here's an example. The last time oil was here, 68 bucks a barrel, the XLE was trading around $70. Well, it's now $54 with oil the same price. So, Kelly, the market is either saying oil's gotten ahead of itself or everybody's been so burned by 10 years of capital destruction in the oil stocks that they simply won't take a chance on that sector. So there's this weird gap between oil and oil stocks. Still going well, but not as well as you might have thought.
Sure. And just to put a point on it today, though, you'd think, okay, they're meeting, they're talking about more supply coming online. Typically, that's not a great environment for oil prices. Why is WTI still spiking? Is it just because there's still such a sense of not enough supply to meet the level of demand, or those passenger figures that you cited? It's just interesting. And I know 70 has often been a ceiling here, so I guess that's the real question, is whether we kind of really get up to or even through that level.
Well, even if Iran comes back on the market, gets some kind of a deal, you heard Goldman Sachs, Jeff Curry, and others say they think the market can easily absorb the extra Iranian barrels because demand, Europe's COVID case, Germany, their COVID cases are down 95% from their high. The vaccination rollout is starting to roll over. India is coming down, the third biggest oil user in the world. India, thank goodness, their COVID cases are falling as well. So there's an optimism about the global boom, not just in the U.S. And I understand our big push to EVs here, Kelly, but let's be clear, you're going to have a lot of combustion engine cars, boats, airplanes on the market there for a while. The market just believes that even with increased supply, increased demand will outstrip that. And the big majors, they want to give the money back to shareholders rather than, put it in a hole in the ground, literally, which has burned capital for a better part of a decade.
Shepard Smith here. Thanks for watching CNBC on YouTube.